Hello, everyone. Welcome again to our 18th installment of Coinrule Strategy of the Week series. Again, we're thrilled to be streaming simultaneously across an array of platforms. So you could be tuning in via Twitter, LinkedIn, or numerous other venues. Don't forget that a recorded version of this live stream will be uploaded to our YouTube channel afterwards. If you're catching up with us with the YouTube recording, consider becoming a part of our vibrant Discord community to stay up to date about our next live streams. You're going to find an invite link to this in the video description. This will afford you the chance to pose any strategy-related queries in real time, enabling us to provide instant responses, which is obviously a win-win for both parties. Of course, we understand that live attendance may not always be feasible due to professional obligations, time zone differences, and more. In such cases, feel free to revisit the recording on YouTube at your convenience. Lastly, remember that our YouTube channel hosts a diverse array of Strategy of the Week videos, so if this strategy isn't quite your cup of tea, there's plenty more to explore. Okay, so let's dive in. So, similar to last week, we're spotlighting a strategy that harnesses the power of the Relative Strength Index, RSI, and basic moving averages to pinpoint entry positions for long positions. For position exits, we'll again be leveraging these two technical indicators. What makes this strategy particularly appealing is that it will not use TradingView signals. This means it will be able to take advantage of Coinrule's Any Coin scanner. This is really one of our most powerful features, and essentially this tool will scour the market, hunting for coins that match our entry criteria, and subsequently initiating trades on those coins. Additionally, this strategy comes pre-packaged as a template on Coinrule, making it a breeze to set up and launch. This is actually one of our most long-standing and most popular templates called Catch the Bottom. For those interested in a deep dive, the accompanying script for the strategy is available on TradingView. If you wish to conduct a backtest, that's entirely possible, and I'm going to guide you on how to do that process later on. So first, let's have a quick look at the broader macro picture. So let's head to TradingView quickly. So firstly, we recently got a resolution to the debt ceiling crisis, which essentially means that the United States government is no longer at risk of defaulting on its debt. The debt ceiling is essentially a limit on the amount of money that the government can borrow. And when this is reached, the government can no longer borrow money to pay its bills. This can obviously lead to a government shutdown, which is when the government is unable to pay its employees or provide essential services, which would obviously be very, very bad for the economy. The debt ceiling resolution was recently passed on June 3rd, and it essentially raised the debt ceiling by $1.2 trillion. This will allow the government to borrow money until around December the 16th, 2025, if we forecast current spending to continue. So although the market is not currently out of the woods the market is currently out of the woods with respect to this for now, we will probably be having a similar debate again come December 2025. But at least that's a few years away for now. So currently, as you can see here, Bitcoin is valued around $27,000 and Ethereum is trading close to $1,850. The worldwide cryptocurrency market cap is approximately 1.15 trillion right now, having fallen about 3.4% in the last couple of days. Around $45 billion is locked in DeFi, and Bitcoin domination is currently around 50% of the market. The performance of equities has been relatively flat in recent days, but the cryptocurrency markets have seen a sharp plunge recently. You can see this just here. We had a quick flash dump. This was spurred by a string of fresh filings by the SEC. Among the actions was a lawsuit against Binance, its associated companies, and its founder, Changpeng Zhao. These were for alleged infractions, including the provision of unregistered securities, such as BNB, BUSD, and staking services, failure to register as a clearinghouse, broker, and exchange, inappropriate mixing of customer funds, wash trading, and more. So it was really a waterfall of charges that they've imposed on Binance. These charges have rattled the crypto markets briefly, I should say, causing Bitcoin to drop roughly 5% yesterday, leading to the liquidation of almost 300 million in long crypto positions, which marked a daily record for 2023. The SEC's regulatory pressure in the US escalated as it filed a lawsuit against Coinbase less than a day after the action against Binance. The SEC claimed that Coinbase also neglected to register as a clearing agency, a broker, and an exchange, and further accused the Coinbase staking program breached securities laws. As a result, Coinbase shares fell about 16% on the morning of the 4th. Despite this, the crypto market seems to be somewhat resilient following the lawsuit against Coinbase. You can see here it didn't actually perform too badly, possibly due to the fact that leverage was largely eliminated with the news of from Binance. So you can see the SEC are really going after the big exchanges this week. Okay, so let's have a quick look at the technicals here. You can see I've highlighted some key levels. During our last strategy of the week video, I highlighted that the MACD line, which is this blue line here, looked like it was about to cross above its signal line, which is the orange line. You can see that this recently happened just again here, and it's crossed back under actually. So it's really teetering whether it's going to go above or below. So it's still quite indecisive. If it crossed above, this would be a bullish signal. This is when the histogram turns green. You can see one of the times that this happened, we got a big increase in bullish momentum. And then when it turns red, which is essentially when the MACD crosses under its signal line like this here, and the histogram turns red, we got a big increase in bearish momentum. So it's quite an important indicator to keep an eye on. So you can see here, it's quite indecisive whether it's going to go be positive or negative effectively. So this is one to most certainly keep an eye on. Let's also have a quick look at the RSI. We'll pull this up. Okay, the RSI, you can see it's been relatively in closer towards oversold territory in recent kind of weeks, but right now it's relatively neutral. You're just hovering around 50, so that's not telling us a huge amount right now. Right, so let's discuss the indicators we're using today for the strategy. Most of you will be rather familiar with them again because it's just simple moving averages in the RSI, but I'll run through them quickly regardless. So we're not using the MACD, so I'll get rid of this and I'll just pull up the RSI. So we're going to discuss this one first. So this is the Relative Strength Index is a popular tool used in the technical analysis of all financial markets. It's a momentum oscillator that measures the speed and change of price movements. It essentially oscillates between 0 and 100. I'll see if I can shrink this quickly so you can see that. It's usually between 0 and 100 up here. Traditionally, the RSI is considered overbought when above 70 and oversold when below 30. In other words, if the RSI value is above 70, it might suggest that the asset is being overbought and could be due for a price correction or reversal. Conversely, an RSI value below 30 suggests that the asset may be oversold and could be due for a price bound or reversal. The RSI is calculated by using average price gains and losses over a defined period of time, typically 14 periods in its standard form. Essentially, it is used to help identify whether an asset's price momentum is strong or weak. It's worth noting that, just like all technical analysis tools, the RSI isn't perfect and doesn't guarantee success on its own. It's typically used in conjunction with other tools and analysis methods to make informed decisions. So let's have a look at some moving averages. As you can see here, I've got two moving averages loaded up here. This red one, MA9, and this orange one, MA50. We'll be using these for our exit conditions for the strategy, so they're pretty relevant ones to discuss for the strategy. So simple moving averages are a widely used tool again in technical analysis. They're again one of the most popular ones used. They help smooth out price data by creating a constantly updated average price. The average is taking over a specified period of time, like in this case, 9 days on 50 days here. But this could be 10 days, 20 minutes, 30 weeks, or any time period that the trader chooses, really. They're very customizable. Here's how it works. So say you want to calculate the 9-day SMA for a particular coin. For each day, you would add up the closing prices for the last 9 days and then divide that total by 9. This gives you the average closing price over the last 9 days. The next day, you would drop the oldest price and add the closing price for the new day and divide by 9. The process is repeated over and over, which creates the moving average line on the chart. It's very easy using these technical indicators here because this is obviously automatically done for you. The main function of an SMA or simple moving average is to provide traders with a sense of the overall trend direction of the market. If the SMA is moving up, the trend is up, and if the SMA is moving down, the trend is down. It's worth noting that SMAs can be biased due to their nature. Since they average past data, they may be behind the market. Exponential moving averages, which are similar to moving averages, simple moving averages, but they place more of an emphasis on more recent data points. So just like the RSI, simple moving averages are typically used in conjunction with other forms of analysis to make informed trading decisions, and they're not guaranteed to predict market movements accurately on their own. Hence, this is why we're using a combination of the two technical indicators to enter and exit trades with this strategy. Nice. So let's discuss the entry conditions of the strategy. So to enter positions, the strategy looks for 3 conditions to be met. The first 2 conditions rely on the RSI. We require the RSI is less than 40 and to have decreased by 3. So this would be like down here, would be this point. The next entry condition relies on moving averages, and we require that MA100 crosses above MA50. So as you can see what's happening here, the green line's crossing above the orange line. So once these 2 conditions are met, this and this, the trade would be entered. Okay, so let's go over the exit conditions. So to exit positions, the strategy again utilizes moving averages and the RSI. The first condition relies on the RSI, where we require that it is greater than 65, i.e. it's being close to being overbought, which would logically indicate a logical place to exit a trade, or exit a long trade, I should say. Cool. And the second exit condition relies on moving averages, and we simply require MA9 to cross above MA50. So these are the 2 moving averages we looked at a minute ago. Just like this, the red line crossing above the orange line. And once these 2 conditions are met simultaneously, a trade will close. Great. So now we've discussed the entry and exit conditions. Let's take a look at back testing. If you remember earlier, I told you that the script is available on our TradingView profile. So this is it here, catching the bottom. You see here we've got a description of entry and exit conditions. It's just what we've been over, but it's here for your reference. So you can just come down and you can add this to your favorite indicators by doing this here, or you can just copy the code from down here. I'm going to copy the code because it allows me to edit some inputs, which you might also want to do to get back testing data, which is more aligned to your personal strategy. So you just come to the chart you want it to run on, paste the strategy in here, and then you can effectively just add it to the chart if you want to try it in a standard form. But I can just show you how to enter, change a couple variables. So this is the data, essentially where the backtesting data will be from. So I'm actually going to change this from the start of 2022. So let's change this to a 1. This also in its default form, it presumes each trade is using 100% of the equity. So imagine if I have $100, if having this at 100 presumes that 100% of that equity is allocated per trade. You could reduce this to 10, 20, whatever really fits your strategy, just to get really accurate backtesting data in line with what you would traditionally trade with. You can also edit the RSI decrease values as well. Just these would be the entry conditions. You could edit these to try and hone them better, to try and improve the strategy. But I've backtested it with quite a lot of range of values, and I found that these work well. So I'm just going to keep these in the standard form. Now, an important note here is this commission value here. 0.1%. This means each trade will presume a commission of 0.1%, which is aligned to the base fee on Binance. So let's say you do your trading on Coinbase where the fees are a bit higher. You could change this to a different number, essentially to get more realistic backtesting results again for you. I'm just going to leave it at 0.1 because I trade on Binance. Cool. So once you're happy with this, click Add to Chart. And you see you're given some backtesting data here. So you can see we made a 24.9% net profit, 16 trades, and we were profitable 62.5% of the time. So I'm just trying to zoom in a bit here so you might be able to see this a bit better. You can also just change the time frame up here. So you can see I actually performed better on the 15-minute time frame. Let's try 5 minutes. So we made a loss. So we prefer the 15-minute time frame. You can also change the pairing up here. You can see that they will automatically change. Let's test this on Bitcoin. You can see it made a loss in the 15-minute time frame, and on the 30-minute, it performed better. It made a profit. We're actually profitable 80% of the time, which is obviously pretty good. So this would suggest that one Bitcoin, it performs better on the 30-minute than the 50-minute. So you can really play around with this with a load of different time frames, pairings, to find one that really works for you. I'm going to just come to Coinrule because I'm ready to run the strategy. And this is when you can decide what coin you want this to run on. So if you want to take advantage of any coin scanner, which is, as I said earlier, it's quite powerful because it will essentially scan the market for coins that meet these criteria and then enter trades simultaneously on them. I'm actually going to use this here, but if you wanted, you could just have this run on Bitcoin. But yeah, as I said, I'm going to just have any coin. You also have to choose the time frame that you want it to run on. Remember, we saw with Bitcoin that it performed better in the 30-minute than the 50-minute. So I'm going to have this run on the 30-minute time frame. So to change all this to 30 minutes, you can also quickly just come up here. I've already got the strategy loaded, but come up here, just come to search and type in catching the bottom, and you'll see it here, and you will have the strategy automatically loaded for you. So when these conditions are met, I'm going to buy $100 of that coin from my USDT wallet as a limit order. And then when the coin from action 1 has RSI greater than 65 in a time frame of 30 minutes, remember these are our exit conditions and these are our entry conditions up here. Then I want to sell 100% of the amount bought of that coin to my USDT wallet as a limit order. I want to execute 20 times in total, and we call this catching the bottom. So once you're ready, you click launch, you're given a little preview of the strategy, and then once you're ready, you're happy with this, you just click launch. And there you go, your strategy is now live. Thank you very much for listening to the Strategy of the Week video. I'll hang around just for a couple minutes just to see if anyone has any questions. Just feel free to post them in the chat of whatever platform you're on. I don't see any so far. Cool. So if no more come through, I'll just end this here. Thank you very much for listening to this video. I'm really excited to see what you create. Do you have any questions about the strategy? Just feel free to post them in the comments or reach out to support@coinrule.com. Drop an email to there and one of our dedicated support team will get back to you. Thanks a lot. Bye-bye.